and welcome. You're watching Budget Wish List, and we'll talk to one sector which has, of course, the big budget bet, in fact, is going to be consumption, and that's what most people believe on the street. And who better than Abneesh Roy, Executive Director at Nuvama Institutional Equities, joining in to talk to us about that. We also have Vipul Bowar, Senior Director and Head of Equities at Waterfield Advisors, joining in with a broader perspective on the budget. Abneesh, I'm going to start with you first. In the lead up to the union budget, the consumer sector is anticipating announcements that will drive rural growth. Over the last couple of months, the rural sectors already began to show signs of increasing demand. What do you feel, or what do you think should be on the wish list in terms of consumption, rural consumption in specific, with regard to this budget?
Yeah, thanks. So we expect in the union budget, government to take steps to address the slower consumption in both rural and urban in the lower end. So we have seen, yes, there is some improvement in the rural volume growth for consumer companies, but still it is below expectation. Frankly, if you see India's per capita consumption in FMCG in the rural area is around $20, which is around 1/3 of the urban per capita consumption. But in most parts of the last 2 years, if you see, rural has been growing slower than urban. Last few months, it seems to have reversed. Very early days, I'll say. But ideally speaking, rural FMCG should grow much faster than urban. One additional challenge is because of the telecom hike, which happened a few weeks back, almost 15% to 20% kind of hike. Again, at the lower end, there will be a problem in terms of the rural FMCG outlay, because there will be more spends on telecom. So due to all these reasons, we expect the government to increase more stimulus programs for the rural. Post the new government coming into power, the first step by the government was towards more housing, more rural stimulus, clearly focus seems to be for the coalition government. So it could be through different measures, for example, more MSP hikes, more NREGS outlay. NREGS outlay anyway is more of on demand. So last few years, we have seen the budget for NREGS may not be high, but eventually the actual spend is much higher. So we expect more such programs for the salaried class, especially for the lower end. We expect lower taxation, more exemption, because we are seeing stress in the lower end of the urban consumption also. So it will be a mix of all this. So yes, the FMCG companies are hoping that some of these will come through. So we are watching that very closely.
And data is backing that, Abneesh. In fact, rural consumption for the first time overtook urban consumption in more than 5 quarters. So clearly the urban consumption, or the lower end of the urban consumption, is also, or has been struggling. Abneesh, if more stimulus has to come in, and it's going to push rural consumption, because there is a significant part of industry that believes that measures will be populist. Where do you think the uplift will come in? Will it be discretionary spending or non-discretionary, in your opinion, in the rural piece?
I would say it will be more towards the staples, because in this lower end of the consumer, this is the more important, more day-to-day, more necessity kind of a spend. So I would say that if the stimulus program comes, the bigger beneficiary will be the FMCG companies. Discretionary will also benefit, but large part of that will be more towards the unorganized part of consumption, unbranded, those kind of players, rather than necessarily going towards the listed organized player. There will be some benefit for sure. So players like V-Mart, for example, they are into UP, Bihar, and there if the rural stimulus programs are also more indexed there because of much higher rural population, for example. So such companies will also benefit, but my sense is the benefit will be more towards the staples companies.
More towards staples. Abneesh will talk about that in a little more detail, but I'll bring in Vipul as well. Vipul, most people believe that it's going to be about 2 C's, this budget: construction and consumption. We'll talk about consumption because, like Abneesh said, and we both agree that this budget may be a little more populist. You've got a bunch of state elections coming up. Rural consumption requires a push at this stage. What do you feel? What do you feel the focus of the budget will be? And with regard to consumption, what are your expectations?
Sure. Thanks, Amina. Hi, Abneesh. So today, mostly 40 to 45% of the population is dependent on agri income, one way or the other, and it's there is no doubt that there'll be some sort of a stimulus, some sort of a direction towards increasing their consumption or increasing their purchasing power. So that is for sure. But at the same time, I think what Abnish also highlighted, that one segment which I think the government will focus on is also the urban poor, where most of the population which had moved from urban cities to rural in the pandemic and now wanting to shift back, they too are struggling. So a holistic approach towards increasing consumption would be looked upon, and then that is where I think so. Instead of just focusing on rural income, I think they should focus on consumption at the overall level. That is uh, what the government should look at. uh, Also, you look at the private consumption is also slowing down. So in a way, while the discretionary consumption is also slowing down, so in a way, I would say from a consumption point of view, rural of course, but at the same time, I think it should be a holistic approach towards increasing consumption. um, on the construction side, I'll just take 30 seconds. I think one sector which was beaten down, I think there has been a decade of slowdown, was real estate. And if construction has to be talked upon, I think real estate is one sector which actually pushes across all segments. So the rural consumption also benefits. The infrastructure also benefits. So right from cement to all the way down to electrical goes to wires. I think this is one sector where I think the government should focus on. And I think they have introduced enough of incentives, and I think they should continue to push this sector. I think the last time, I think it was 2012, 2022. It's been 10 years where the real estate as a sector has seen a slowdown, and now it has started seeing an upcycle. I think they should focus on continuing this upcycle.
Right. Amnish, I don't know whether I can ask you this with regard to budget or generally an outlook, because you've got this right more often than others. What is your picks? If you've got to play the budget theme and even extending that out a few quarters, if you obviously said you prefer staples, so in the staples piece, what are your top bets and why so?
Sure. So what we have seen is in the last 2 months, there has been a good rally in most consumer stocks. Many of the consumer stocks, in fact, are at an all-time high also. Uh, we see that post the week Q1 results, for example, Asian Paints comes out on Wednesday, and similarly HUL comes out next week. There are such laggards which have still not gone back to the all-time high or even 1 year high. So post the results, in fact, our sense is ITC, HUL, and Asian Paints could give a good catch-up rally. So these are stocks in which near-term triggers are a bit missing because of the weak numbers in Q1, because of one-offs, or because there was a price cut, etc. But that doesn't derail the longer-term story for these three companies. So these are the valuation comfort plus reasonable recovery stories. Otherwise, in terms of good play on the rural, Imami, Dabur, Britannia, Godrej Consumer continue to be our preferred picks. We also continue to like Varun Beverages and Nestle. But in those two stocks, the valuation comfort is not there. So generally, we are positive on most of the consumer names, but the comfort on valuations will be ITC, HUL, and Asian Paints, and even Berger Paints, because those stocks are still well below their all-time high.
Right, we'll talk about QSR as well, a little more detail, Abneesh, with you, because I know you track that closely, and also Titan and Kalyan Jewels. I don't know what's happening there. But just before that, Vipul, over to you. What are your, I mean, I know you're an advisor, and hence a lot of the calls that you'd give are more strategic in nature. But if you've got to play a tactical strategy and you've got to play budget, what would you recommend on the buy list between now and the budget and maybe a quarter in?
So two sectors. One is of course agrochemicals. I think this is one sector which uh, has been underperforming for a while, and that is, I think there is a lot of I think attraction which can happen there. So agrochemical would be one theme to look at. And the second would be housing finance companies, which will be focusing towards small ticket rural housing. So these are two themes which should be looked at. I think structurally also, they should benefit with the monsoon in line and things in place. So these are two themes which I think should be the biggest beneficiaries in going to the budget and going forward as well. I think that is one. These are two themes I think can be played pre-budget, post-budget as well.
Right, and I guess the valuations are compelling, so may still look like good, attractive at their current market price. Abneesh, QSR, you had a little bit of action on the likes of Zomato, which hit a record high on Friday. You have a listing coming up from Swiggy anytime soon. How are you viewing the QSR space as whole? And also, quick word on retail, if I can get that. And I know I'm being greedy, but anything on Titan versus Kalyan Jewels? Kalyan's got a bunch of brokerage buy calls that have come in this morning.
Sure. So on the retail and discretionary space, definitely we are bit more selective. So we continue to like the more expensive names like Trent, because there again the growth metrics will be much stronger than the sector average. We also like VMart. The quarter update was quite decent in my view, and coming back of the double digit SSG is a positive, and the rural recovery and the budget should also help because it is more focused on UP Bihar kind of market. On the QSRs, yes, my sense is the recovery will start from Q3. In Q1, again, we have seen that because of the severe heat wave, especially in-store dining has been weak for most of the QSRs. There clearly Jubilant Foods and RBA and Sapphire and Devyani all are still well below their 52-week high. But our sense is Jubilant Foods is clearly gaining market share in the Domino's with free delivery in most of the days. They are also growing much faster than Pizza Hut. So they could see more recovery in the coming quarters. Coming to jewelry, if you see clearly Titan, we expect weaker numbers to continue even in Q2. So Q1 at 9% growth was weak in the jewelry business. But even in Q2, the base margins are much higher. And Kalyan is growing much faster because of the much higher franchisee route which they have, plus the smaller base also. So overall competitive intensity in that space, jewelry space, is quite high because gold prices have moved up. So the local jewelers are able to offer more discounts. But within the organized also, Titan clearly with the higher base, and because it has more indexation to the studded diamond, it is facing near-term headwinds in terms of slower growth. Of course, long term, the risk of the lab-grown diamond remains. With almost 1/3 of the business in jewelry coming from diamonds, Titan has that higher risk. So we will be underweight on Titan from near-term perspective. So we'll prefer Trent and maybe some of the QSR in that space plus VMart. But as of now, Titan remains an underweight for us.
Right, Vipul, we're also the thick of the earnings season now, as we see, with 36% of Nifty companies reporting earnings this week. A quick one, what are you expecting from the earnings season? A more holistic view just beyond the budget, because I think that's also what's going to be significant in terms of market movement.
So, sector specific, I think where we see valuation comfort, you rightly pointed out, is, and most of the sectors are now I think recovering is technology is where there is valuation comfort. Where there'll be growth, where there'll be growth traction and it'll continue is in capital goods, infrastructure. I think the budget will give us more clarity on the capex, so that is where it'll continue. Autos is where we'll see growth continuing. Where there is valuation comfort is technology, FMCG, where there is valuation comfort. But market is a discounting machine. Market has already discounted more or less the earnings. I think this is something which is where we need to cherry pick on individual businesses rather than picking on a holistic basket approach. But this is something where we look at. I think financials too look interesting in terms of valuation, but I think in financials the focus will be more towards non-lending side of financials and less towards lending, because in the non-lending side of businesses, which is the AMCs, the asset management companies, and the wealth management companies, are seeing a lot of traction, and that is where the focus would be. So overall, expecting a stronger growth overall at a market level. Valuations might look expensive, but someone is willing to take a 1 year forward view or a 1.5 year forward view. I think markets are are not extremely overvalued. Markets are fairly valued.
Right. Vipul, thank you very much. Abneesh, always a pleasure to have you on the channel. We'll hopefully connect with both of you on earnings soon.